This is a Your Farm Business podcast with Mike Krause of P2P Agri. This is a Your Farm Business podcast brought to you by P2P Agri. My name is Tom and I'm the host of this episode today, and we're chatting with Mike Krause, the CEO and founder of P2P Agri, who joins us now. G'day, Mike.
G'day, Tom. Good to see you again.
Yeah, you too. I really enjoyed that last conversation that we had regarding the relationship between banks and farmers. There's some really good insights in that one, and this one is sure to be another good insight between accountants and farmers. And I think maybe even more so than the relationship between the bank and the farmers, I think this one plays into your personal experience even more so. There's a great sort of relationship, I think, between what you do there at P2P Agri and what that's grown to become, and the role of accountants, and that happy spot where you seem to sit in the middle, Mike, where you're talking to the farmer and you're talking to the accountants, has given you a really nice perspective on this. So we're just going to unpack your perspective on the relationship between accountants and farmers. So when did that start for you? When did you start building that understanding?
Look, that's a really good question, Tom. I run a consulting practice with farmers where my objective is to help farmers maximise their profitability rather than minimise tax. So I'm a bit like a farmer's accountant, except I'm not looking on the tax side of things. The philosophy is let's make the most profits for the farm, and then we can worry about how do we minimise that tax, because we should have the money to pay the tax that's required that way. So I've probably consulted to over 200 farms in my career, and a lot of those have been talking with their accountants as well. And I've sat in a few farm succession planning meetings with their accountants. So I understand the accountant's role, and I understand what advantage they bring to farmers. But I think as farmers, we need to also understand what the motivation is of accountants. And farmers probably don't talk to accountants to say, what's your motivation in helping me? But it is a little bit different than what we might think.
Yeah, because I think a lot of farmers do just approach it as how can I pay the least tax possible? And so there's a few mindset flips I think that we'll go through as this episode continues. But let's start with the accountant's perspective. I think the farmers watching this will know what they think already. But what's the accountant think from his shoes? What does it look like?
Okay, there's a couple of ways I want to approach this, Tom. One is there are some good accountants and there are average accountants out there. And it's like any profession, teachers, lawyers, doctors, there's variations of skills and things like that. So this is not going to be broad brush, but accountants, the way I've seen them is there's two motivations for them. One is that because tax is a legal thing, so, Tom has to do an annual tax return, Mike has to do an annual tax return. That's a legal document. They're the authors of that legal document. So what gives them the right to be able to do that? Well, they've got to do training, they've got to do accreditation, and they've got to go up to their professional organisations and make sure they've got the skills to do that. So if you think about it, with those skills and those tickets, they can run an accounting practice. But what happens if they fail that? And they might have 40 clients, 50 clients in their accounting practice that they're servicing. And the ATO comes back and says, hang on, Tom, you haven't been doing the tax compliance stuff as well as we should have done. We're going to take your ticket away from you until you can prove to us you can do it. So because of that, the accountant's number one priority is to make sure they're doing all the correct things that the ATO want. So their motivation is to maintain that. So because of that, correctly, they're conservative. Most accountants don't want to go into the grey areas too much. So that's one of their primary motivations. And the other motivation is they feel their biggest role in their services to you as farmers is to make sure you're not paying tax or you're minimising your tax. So that's where their focus is on. And it really came to me, this is 20 years ago, where a bank came to me and said, Mike, can you go and visit this farmer client of ours? I know he's a number of hours away from you, but can you go visit them and see how they're going financially? So I turn up, and if you've got no financial records, at least the farmer has to have their tax returns of the last few years because it's a legal requirement. Yes, we've got to do that every year. So I went through and I looked through the tax returns in the last 5 years. You've got to know how to interpret tax returns to see whether, this farm's viable or how poorly it's been performing. And they'd produced 5 years of losses in a row. So I'm thinking, this is probably not a good idea that they've done this. And that's probably exactly why the bank has sent me to come and have a look at them and talk with them. But I thought, I wonder what the accountant's been doing in this time. So I rang the accountant up and I said, look, your tax returns for this client shows 5 years losses in a row, which isn't very good. Have you pointed this out to them? No, I haven't pointed it out to them. What? You haven't pointed out that financially they're not going that well? No, that's not my role. They're as happy as beans with me because they haven't had to pay tax for the last 5 years. So I've done my role as an accountant. They're not paying any tax. They're happy with me. And I'm thinking, no, because yes, it might be one thing that we don't want to pay the tax man any tax, but if we're not paying tax means financially our business is not going very well. So that pointed out to me very clearly that the accountant didn't feel they had a role of due diligence or certain level of care to inform that farmer that they were going backwards in the rate of knots. So that's where the aha moment came for me. Now, I'm not going to say that is all accountants, but surely that shouldn't happen at all, I don't think. So the motivation to me then I saw of accountants to say, right, the farmers think I'm a great accountant if I don't pay any tax, and if I can keep it that way, well, they're thinking I'm doing a good job for them. That may not necessarily be the case.
And we're going to assume that if you've come across that once in the wild, then it probably does exist across other spectrums and other places as well, maybe more common than might be thought. So
yeah.
For the ones... Oh, sorry, you go, Mike.
No, and I suddenly thought that really we don't assume, a lot of us as farmers, we assume our accountants, they're the financial people, they're the people that know what income we're getting and what expenses we're spending out, they do the tax stuff. We assume that they've got a good financial understanding of our business and we can go to them for advice to say, there's a next door neighbour come up for sale, or hang on, wool prices aren't particularly good this year, should we shift out a sheep? We assume that the accountant is educated to answer those questions, but really their education is to help minimise your tax or do your tax returns, not necessarily those other questions. And I think we shouldn't assume that all of our accountants we're using should be used in that way.
Yes, yeah, very understandable. So how do accountants, generally speaking, how do they balance legal tax minimisation with the farmer's long-term business growth?
Look, that will vary from accountant to accountant, Tom. And I'm not saying it's the accountant's fault. It's more us as business people to be asking the right questions to our accountant. So most of us are saying, right, we just want to use the accountant to do our tax returns this year. Yes, I don't like paying them 10 grand or 20 grand a year to do it, depending on how complex our business structures are. But I just want to get it over and done with. I want to know how much tax I'm going to pay. When do I have to pay that so I can get on with life and not think about it? So most of us are just asking those questions of our accountant to say, righto, this year I've had a good year or I've had a bad year. We're coming into May and we're planning for the end of June because that's the end of the financial year. What financial position are we going to be likely in? Do we have to spend more money to decrease our profits so we're paying less tax, or we don't have to worry about that? And there are some really good strategies out there like farm management deposits where we can take money out of this year and put money into next year to help minimise or spread our tax compliance out. So most of us are just focusing on our tax And if that's all you need your accountant to do, that's fine. They're doing their job really well. But if you're relying on your tax person to give you feedback as to how financially you've been going and how you've been going compared to what your vision or 5-year plan is for your business, well, then you'll have to ask them other questions to that, which might cost you a little bit more because they're going to spend a little bit more time trying to understand whether you're tracking correctly or not. But it's really up to us when we deal with our accountants to be educated as to know what questions we would like them to answer, and also to understand what capabilities they have to answer it, and not to assume they've got more capabilities than they have, depending on the level of experience and education your accountant has.
Is that something you've seen with farmers? Do they expect too much from their accountants, or do they expect them to know things that they maybe just are not familiar with?
Yeah, look, I think so. When I've been working with accountants and doing succession planning for farm families, we put a lot of professional expectations on our accountants, and we assume they're doing really well, and they could be. I guess that's another myth to bring to the table. Accountants are just like us. They'll make mistakes. And I guess for me, about 20 years ago, my accountant did my tax return and said, "Oh, Mike, here's another 25 grand you'll have to pay in tax." And I'm thinking, what? I didn't expect to pay that. I went back and had a close look at what he'd put together and what was going off to the to the tax man. And I said, "Oh, look, this is an element that isn't true. I don't think this is true." And he looked at it and said, "Oh, no, it's not. Oh, that 25 grand that we thought you had to pay, you don't have to do that." So I thought, oh, okay, I pay my accountant to do my tax assessment. The thing is, don't assume they're doing the correct thing all the time. So when they give you that draft tax return for the year to say, "Look, you've got to sign off on this, Tom," don't just sign off on it. Make sure you go through the numbers and they make logical sense to you. So just to return back to working with accountants, this accountant particular example with the family succession he took hold of the agenda and took hold of the number crunching and yes, took hold of communicating with the lawyers because we needed another business structure set up. And what we thought would only take us 2 or 3 months actually took us about 8 months. And it was the result of the accountant being quite tardy in continuing the process in a normal, expected manner. So, they're people. I guess the myth is don't assume everything's done exactly correctly. And the same with lawyers. Don't assume that it's done exactly correctly. We've got to be educated enough and checking enough to make sure those expectations are being met as we work with them.
And what about the understanding of seasonal income versus longer term purchases such as land versus just cropping? We kind of touched on this in the banking episode as well about how banks look at that. But how do accountants look at that?
Well, accountants will probably say, "Yeah, Tom, I can help you do those numbers," but just bear in mind the numbers they're using is their tax-related numbers, and they've got to be educated that the balance sheet and the tax return is what the ATO want, not what your banker wants or what you'll need to make your decisions with. Just to give you an example, the ATO valued that block of land that Tom's father bought back in 1966 at the same value. So it's still there at $60 an acre. But we know land has gone up to, $3,000 an acre since then. So why is it still on the balance sheet at that? Well, the accountant isn't incorrect. It's actually valued when Tom's dad bought it. And so it's the only way the accountant knows how to work out Tom's capital gain issues if he comes to sell it, because we've got a purchase price and we've got a sale price. So it stays in the balance sheet that way. If we're going to talk to our banker about security, we've got to make sure we put the correct market value of our land in, the correct market value of all of our machinery that we own, the correct market value of all the livestock that we own. And it may not be valued at market value in your tax return. It's got to be checked out. And also, the bank will want to know what your cash flow is, whereas the accountant doesn't necessarily need to know your monthly cash flow. They just need to know your annual profit and loss to work out your tax liability. So the accountant may not be fully cognizant of your cash flow. And cash flows planning can change from year to year, depending on what crops are going in what size paddocks, and that changes from year to year. So cash flow projections can change. So we do need to drill down and to do more specific understanding of our cash flow and our balance sheet, more so than what your accountant needs for their tax compliance work. So if you're relying on your accountant to do that, make sure your accountant has the skills and the know-how to differentiate between what the ATO wants and what the bank wants, and what will be useful for you as their client to help answer that question.
Okay, so this is where it becomes really important to have a good relationship with your accountant to, have that understanding between the two of you of what the expectations are, what their knowledge is, and how you're going to grow together. Yeah, quite important.
That's quite important, and accountants are really valuable to us, but also educate ourselves up to know exactly what we need to make some of those really important decisions, Tom. And not necessarily assume the accountant is in the best seat to make that. A bit like in our previous session where we said, if the bank's going to lend us the money, then it must be a good thing to do. The same with the accountant. And it could be that we come to the end of June and looks like you've had a really great year, Tom, and we've got to either increase your expenses or decrease your income somehow to try and help minimise your tax. So the accountant might say, well, Tom, that header you've got out the back, how about we sell that and we go and buy a $1.2 million header? Because you know what? As soon as we buy that, we've got depreciation of 50% available, or we've got loan repayments and we can claim against that tax this year. And so it'll minimise our tax that we have to pay this year. But we haven't thought about, what if next year is a drought and we've bought that $1.2 million header and the loan repayments are, $400,000, or, it's way up there, but suddenly we've had a drought and we can't make those loan repayments. Suddenly we've added more stress and strain to our business just because we're trying to minimise tax, where it might have been better that we paid a little bit more tax, which kept ourselves financially more robust to really manage that poor season next year. So what I'm also saying, a bit like the bank discussion we had, if the accountant's saying, oh, it's a good idea, and Tom suddenly, he loves beautiful new yellow headers or green headers or red headers, and I wouldn't mind one of them in the back shed. The tax man says I should be able to do it. Why don't I do it? That may not be the best decision. So you've got to take a bigger view of your business, where your business is heading, what risks you have, and sometimes paying that painful tax might be the best strategy than minimising it. So again, it's just educating ourselves as to what our accountant's capability is and what they're not, and we really got to be the masters of our own decision making in our own businesses to keep it going forward.
And so in your experience, Mike, are there any common tax saving strategies that farmers tend to overlook or not take advantage of?
Look, that's really the domain of an accountant. I'm not a tax accountant, but there are some really good things like FMDs where we can take money out of one season, and we can pull it back into the business in a poorer season, which helps both cash flow, but also means that if we've taken money out of a good season, so how FMDs work is, say, Tom's had a good income, looks like he's got a taxable income of $1 million, but he doesn't need all that for next year's carry-on finance. We might say, righto, let's take 200 of that out or 300 of that out this year, put it in a bank, which is, the FMDs are like a deposit in a bank. So in the tax this year, that 200 or 300 we take out means his profitability is coming down by that amount, so we don't have to pay as much tax. But next year, if we've had a drought, and looks like that $200 or $300 that we put away this year we could really use for next year? Well, it comes out in a poorer season where our income is poorer. Yes, we've got to add the FMDs to our poor income, but we're probably in a lower tax environment in that poorer season. So that helps manage our tax liability and also helps manage our cash flow. So that's really good to have a look at. Another strategy, yes, some accountants might advise Tom to, okay, we're coming into June, why don't you buy next year's fertiliser for next year up front? So then we can got that cost in this season, which is a good season. We can bring our tax liability down. So when we get to next year, we've already paid for our fertiliser. That's already available to us. That's perhaps another way of doing it. You just got to make sure you've done your next 12 months cash flow to look at the likely impact of you paying that up front as opposed to not. That's another way of doing it. Accountants obviously look at machinery replacement if you're coming out of a good season, which might not be a bad thing because you might be able to afford to put a down payment on the new header or the new tractor or the new spray plant. So it might be a useful thing, and that could be used as tax. Accountants also can tend to want to use different business structures. So Tom, you might be a partnership and he said, oh, look, why don't you set up a trust and we'll put assets into that trust and we'll use that trust to help mitigate the risk of divorce or help to spread our tax out. Yes, we can do those structures and yes, they can help. To just be mindful though, the more structures we have in the farming business, the more tax returns we need to do. And so the more fees the accountant will charge you to do the tax returns on those different structures. So we've got to be mindful of, okay, if we're using them, what risks are we mitigating? Those risks that we're mitigating won't necessarily come cheaper. We've got to set up those trusts and we've got to manage those trusts. So you're likely to get higher accounting fees to do that. So, we've got to be understanding that we're going into these things with our eyes open rather than just trusting the accountant to do it. So or advising us.
Yes, very much so. So when it comes to effective tax planning, how important is keeping records, keeping data? I mean, even the P2P Agri software where you're modeling different scenarios, that could be so helpful in this kind of situation to run those different data sets. But how important is that when it goes to the accountant? And do you think farmers do it effectively?
Oh, look, things have changed so much, Tom, since 2000 when GST was thrust upon us, because suddenly we all had to do that. Those who are running businesses had to do quarterly or monthly BAS statements and make sure our GST has been compliant. So I saw a lot of farmers prior to 2000 just getting shoebox full of receipts and invoices and taking it on to the accountant and said, there's all the paperwork, you do the tax, to suddenly everyone jumping on and using accounting software like Phoenix or AgriMaster or MyOb or Quicken and those sort of type computer activities. And that was really the dawn of a new age for farmers because we had to record our numbers of income and expenses like we've never done before. And that's really helped to shape things up. And now with the advent of cloud-based software with Xero, I see a lot of farmer clients going to Xero. It's quite easy to use software and farmers are doing a good job, led by their accountants to get their tax compliance done for BAS. And once they've done it for BAS, then it's all up to speed. We can do the tax type assessment at the end of the financial year. I will advise farmers though to go in and to see their accountants in April or May prior to the end of June so they can do tax planning, so work out what to do. But that's where our software is really useful. It can give a projection of where the business is likely to be from a cash flow perspective at the end of the financial year. And the accountant can then do some manipulation, but you can also use our software to do what ifs. So if we do buy the header, what does next year look like? If we do buy the next door neighbour, if we do put FMDs around away, what does that look like? So what I'm suggesting is that, yes, farmers in far better nick now and they are ever been probably in providing their accountant. One of the issues I do find though is that farmers have let their accountants set up their chart of accounts in Xero or MyOb or Phoenix or AgriMaster. We've got to set those chart of accounts up so we know clearly what our variable costs are and overhead costs are, and set up a chart of accounts that are easy to manage rather than to be very detailed, where some accountants, if we let them do it, gets very detailed, and so that increases the complexity of our bookkeeping. So I would suggest that we as farmers build up our knowledge on what chart of accounts would be best for us to utilise in our management of our farm going forward, and not be solely directed by our bookkeepers or our accountants in doing that.
So, Mike, we often see government incentives come out depending who the government of the day is or what the incentive might be, and then also occasionally tax laws will change. So how does this affect the advice that's given to farmers, either from the accountant or even from yourself at times?
Yeah, look, it does affect, and that's why we're using our accountants, because tax law does change quite regularly and there's quite a volume of that sort of stuff that happens. Particularly how the government drive farmers' decision making for purchasing is that they might look at the economy and say, look, the economy's slowed down a little bit and we want to lift it up, and we'll do that by giving a farmer a 50% depreciation write-off on that new tractor or the new header or the new truck. And so that encourages farmers to say, well, this might be a good opportunity, time to change over that old tractor and old truck, and which may be a good decision. And yes, if it's tax, we can write off with a high depreciation of that particular item. It might be a good thing. However, we don't want to put ourselves financially, if we're borrowing for that new tractor or header or truck that we're getting, that we might put ourselves in financial difficulty if next year is a less than average year. So we've got to make sure that these decisions we're about to dive into are not just tax driven, because the government will encourage us to spend money when they want to, and then next year they'll ride that down. There are other tax incentives that the government give us from time to time, which are useful, and your accountant will brief you on those. The important point I want to make really is that you're the master of your own business journey. You know where you're heading. You want to know that's the dot on the horizon I'm heading to. Does this decision help me become more efficient? If it does, then look at ways that we can do it most tax effectively. And yes, lock it in, and those decisions will flow forward and be positive for you. But if we're ignoring the dot on the horizon that we want to get to, and we're hell-bent on not paying the taxman $1 more than we have to, and I don't blame you for that, because we see a lot of waste in the way the taxman spends our money, but don't just be purely driven by, yes, I'm going to decrease my tax by buying that beautiful new shiny new header. Just think about it. Firstly, if that's a profitable thing, don't just be driven purely by tax.
And so what would you say to farmers who are used to just working with their accountant at tax time and they don't really do anything else? How can they be more proactive about working with their accountant throughout the year?
That's a really good question, Tom. Most of the rhythm is that we have to do a tax return, so we do that. The tax year finishes at the end of June, so we do some planning in April, May, and then we'll wait around till March the next year, because that's when we have to legally do the tax and then pay the tax up shortly after that. So most of us are only probably seeing our accountants once or twice a year. However, that may not be the only time during the year you're making a decision. You might have a decision for, I don't know, we're leading into harvest, we're August and September, and we've done some pre-maintenance on the header, and oh no, it took 20 grand to fix up last year because I did the gearbox in, and this year it's going to be another 20 grand because something's gone wrong with the comb. Perhaps it's time to turn over that header now. So if that's the case, and we find ourselves in August, September, well, perhaps we should have a yarn to the accountant now to try and work out how tax effectively we're going to turn that header over. But rather than, okay, we've turned the header over and we've gone to tax planning in May and the accountant finds out in hindsight, where might have been a better method of doing that. So probably as a needs basis, if you've got a good relationship with them, ringing them up doesn't necessarily mean you're going to be charged a higher fee, but perhaps those discussions, timely manner, may help you manage that end of financial year tax planning a lot more effectively.
No, really, really good advice. And so are there any myths? Are there any common myths or, anything you'd like to cover that you've come across between farmers and accountants?
Yeah, look, I think one of the myths is we think the accountants we're working with, yes, they are concerned about our tax. We might think they are concerned about our profitability, but I think the myth is don't assume that. You're the person that's concerned about your profitability and driving it. They're primarily concerned, which I find with most accountants, is to make sure tax compliance is done and that Tom's not paying more tax than he has to. And that's where it stops. I think the myth is that they're going to inform us, like I said, that story at the beginning of the podcast, where I found this farmer who had 5 years of losses in a row. Not only did his accountant not tell them about that, the accountant felt like it wasn't his responsibility to tell them. So don't assume your accountant has got the overarching understanding financially of your business. Educate yourself to get to that level so that you can continue to ask your accountant the questions you want them to answer, and you understand the realms of financial management that they deal in may not be the viability questions that you might have on your mind.
Yeah, okay. And so, Mike, you've seen tax evolve. You mentioned when GST came in, that was a really big shift in the dynamics of how we ran our businesses and what paperwork we had to do and that sort of thing. Do you see that it could evolve somehow again in the next 5 to 10 years? We've talked a lot about AI in the other episodes and how that is such a moving target and it can dramatically change how things happen. But specifically in accountancy, do you have any insights into what that might look like?
That's like having a crystal ball, Tom. I've seen it changed a lot in the last 10 years. We've had cloud-based software come into it, particularly for farmers. They'd know about Xero and how that's changed their accounting type recording. And that software has become easier and easier to use. So farmers can do a bit more of that work than their bookkeepers do, or if they've got bookkeepers, the bookkeepers can be much more efficient in putting that together. And in some regards, you look at from a distance at Xero was replacing things that accountants used to do for us. But everything's changed in the last 2 or 3 months. Even Xero, which was developing cloud-based, it's a publicly listed company, and its shares have really tanked in the last couple of weeks because of the advent of AI and what AI is doing. Now, I can only think that is AI going to be replacing some of these things that our cloud-based accounting software is doing? Otherwise, why are their share prices dropping down? So my fear, and also I was reading an article this morning, how there's AI agents being developed, which means it's like two people talking to each other. And as they develop, they're saying that in a couple of years' time, your lawyers, your accountants will be replaced by AI. So if accountants are being replaced by AI and the software that we can produce to do our tax compliance, does that mean AI is going to be replacing all this? Does that mean we'll be able to do this much more effectively and more cheaply as farmers? I strongly suspect that's what's happening. But we're at the early part of that change, but boy, is change happening quickly at the moment. So to answer your question, Tom, yes, all this tax compliance stuff and all this tax recording stuff will change. Will it become easier? I strongly suspect it will. How that's going to happen, I don't know. Is it Tom talking to ringing up AI or keying into an AI and talking to a bot and say, how much tax do I have to pay this year? I don't know, but things are changing quite dramatically in that area.
Yes, they are. So watch this space. And I wanted to ask a question about the software itself, the P2P Agri software and its integration when used by farmers for banks and accountants. That's kind of bouncing off that last episode we did as well. So how have you seen the software benefit farmers who use it as a data set to take to their accountant? Has that been something that you've seen used successfully over the years?
Yeah, look, our software, if you think about our software, it doesn't do what MyOb does or Xero does or Phoenix or AgriMaster. It takes the tax accounting type data and adds on the management accounting. So we can answer questions like, is it more profitable, Tom, for you to run your merino sheep or your prime lambs? What's the impact of you buying the next door neighbour out? And we can model a 2-year drought and to see where your business might end up and can you manage that risk. We can answer those questions in our platform. We have farmers using it to do plan cash flow and then each month pull in data from MyOb or from Xero so they can do plan to actual and continue to monitor how their cash flow is going. And that's really useful information for their bank and also for their accountant in managing their tax compliance activity. We do have finance brokers using our platform so that they can help put data together for the farm business and present that to the different financiers out there so that they can get the best deal for you for that next purchase you're doing, whether it's next door neighbour or a header. We also have farm advisors using our platform to put together data together and then go to your bank to help maintain your bank relationship. So the software, Plan to Profit Agri, isn't a direct competitor to any of your tax accounting, but it grabs what it can out of that, adds more information like your paddocks, what size of paddocks you've got, what your weaning rates are likely to be, what your production levels are, and gives you more finite management decision making so you can make better decisions within the season. And then, like we were talking about, forward planning, making sure we're monitoring, we're moving in the right direction to where we should be going. So it's very helpful in that spot.
Yeah, it's a fantastic resource because, just being able to model those different scenarios would be so helpful going to the accountant, making a plan, and then potentially going to the bank to enact that plan. So beautiful little ecosystem. Do you have any other closing comments about tax, about the stressful times that tax time can often be for farmers, and especially in regard to the farmers who set and forget with their accountant and with their tax? Do you kind of have any other takeaways that might be good advice for people considering how they can improve their tax efficiency?
Yeah, look, I think to me, Tom, because technology's around, we're using Xero, we're using MyOb, you've got our software where you can do your plan to actual cash flow in. Keeping on top of that means you're keeping your hand on the pulse of your business. So you can inform your banks when they want information. You can inform your accountant when they need information. And therefore, the three-way activities of maintaining your business is a really good way of doing it. Let's use technology to be able to do that, become more efficient in our time as business operators, so then we can focus on those big decisions and small decisions that keep driving our business going forward. Don't neglect that. If you set and forget and you surprise the taxman or surprise the bank with information, that's when they get a little bit toey and that's when they get hard to deal with.
Yes. All right, Mike, fantastic talking with you again for this episode. Thanks so much for your time, and I look forward to chatting with you again soon.
No worries. Thank you, Tom. We'll see you later. Bye-bye.
Thanks for listening to the Your Farm Business podcast. For more information or to get in contact with Mike, simply search for p2pagri.com.au.